All right, so we've had a couple of nice, good rallies in the last 4 days, and each rally, including today, was followed by kind of a nothing day. So now, what do we expect? There wasn't a lot of volume. I'm going to break down what this near-term rally looks like that we're on right now over the last so many days, whether or not it started this intermediate run. And what can we expect? When can we expect it to end? Is this going to be in a nice, good, long near-term rally, or is it going to be shorter than normal? I'm going to break down the the expectations using technical analysis, using our normal routine, and then we're going to take a look at this intermediate trend that we're on, how solid it is, what's backing it up in terms of what's driving this price action, what we can expect from that in terms of how long this intermediate run can last, and then we'll take a trade in a sector that has been really bullish that might not be one of our best performers. And we'll talk about how to trade a stock in that sector. So let's go ahead and get started. Today is Wednesday, October the 16th, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. So a little bit of a doji pattern here. Again, you notice we're getting kind of big range, big moves followed by little move, big move followed by little move. So it's these big moves are not really able to really take hold. We'll take a look at that and how that affects here in just a second. But at least we have held above this 23% Fibonacci level. That's a very good sign. Again, if we're going to fill in the gaps here, as I'll show you in a second, that would bring us back down to this 38% line. As of right, and that's a little bit of a reversal pattern in terms of a short term, right? A short term basically just getting the blue line to come down. I'm not looking for the intermediate line to come back down below 50. It might dip briefly and show a light pink shading up here. I don't expect it to show a dark pink shading, at least not for 1 to 3 month, right? Extended period. Because it does. I mean, again, dark pink shading, green line. That's a good pattern right there. That's exactly what we want to see on the daily chart. But you notice the near-term line is still not in the upper reversal zone either. So, while it does look like, and I really went over this quite a bit today in my options inventory trading class. So premium subscribers, make sure you check that out if you want a kind of an elongated discussion of what we're talking about here. But while I do think that we'll get a decent intermediate run out of this rally, I mean, again, 1 to 3 months. If it's 2 months to get to mid-December when we got the tariffs supposed to come online by December the 15th. So that's 2 months away. So are we going to get, the seasonality is to be typically bullish heading into the end of the year anyway. So that's 2 months, 2.5 months. The expectation is that we'll be bullish going into that. But I don't think that while this is the beginning of that run, I don't think that we'll do it without at least a near-term pullback first. Getting the blue line back below 50, forming another, because this is a bullish near-term low. The first one, we had progressively lower near-term lows as you go through these lines down here at the bottom. This was our first bullish near-term low, and it was only slightly bullish at that. It just lacked the long lower shadows that you saw there, but it was only slightly bullish at that. We bounced off of it, got back above the moving average, got back above both dotted lines, which is the 23% retracement levels of the last two intermediate runs, this one and then this one. This one being pretty much a one near-term rally intermediate run. We had another near-term rally there, but obviously it failed. It petered out, and then we had the intermediate pullback. So we are above up both 23%, but I wouldn't be surprised if we don't pull back down towards 29.50 first before we get going again. And again, obviously who knows in the short term, especially what's going to happen. But that's kind of my expectations. Again, based on that near-term line not getting above 80. The typical near-term rally, while you're bullish on the intermediate posture, is a 7 to 12 day run of the near-term line above 50 with a move into the upper reversal zone. So most of that 7 to 12 days, we should be above 80 too. And obviously, we haven't been above 80 a single day yet on this near-term run. So it makes you wonder just a little bit, how bullish this near-term run is. It's been on very, very light volume, as you'll see here in a second. And how bullish is that, and how likely is it to hold before we get another near term, another bull, and whenever we get the next near term pullback, the low point should be a lot higher than the last one up here. So good chance that we'll start, then we'll have our good 7 to 12 day near term run with a move up above 80 and all that. Of course, we could also pop above 3,000 and get above 80 on the near term line tomorrow. So, but I don't expect that yet. But I don't expect any near term pullback. While we might get it, like I said, a light pink shading, we might get a yellow line with a pullback below the 30-day moving average briefly. I don't expect it to get back to dark pink shading and or a red line, right? I'm not expecting that. Just a light pink shading and maybe a yellow line, or a yellow line and maybe light pink shading, and which will essentially just be a good buying opportunity on a near-term basis to get going on the beginnings, what would still be the beginnings of this intermediate rally that we have going on. Of course, long-term market sentiment's rising too, and it's above 50 already. So that's about dark pink shading, or excuse me, dark green shading, green line, rising market sentiment above 50. You can't really get much more bullish on a market forecast than that. So, and getting the combination of the dark green shading and the green line at the same time is better than we've gotten. All these previous near-term rallies, they remember have been progressively smaller. They all started with yellow lines, multiple days of yellow lines before you finally turn green. This is the first one that we had in a while where you're already green when you get the green, dark green shadings. That's a very good sign too. So again, I don't want to say like, oh, we're waiting for a pullback. You can't do anything, right? We've got, especially for longer term trades, you can wait out any near term pullbacks. You can start making bullish trades now and wait them out. But it doesn't necessarily mean that I need to close out my bearish trades. Some bearish trades, yes, if they're meeting your rule. Obviously, you close out any trade if it meets your rules. But if they haven't met your rules yet and you want to take small losses, you're not to your loss yet on any bearish trades, you might wait a little bit and let this near-term pullback come down. Then you might not take as big of a loss in some of those bearish trades. Then you can get rid of them as things roll back up and get going up to the upside. So obviously that would all be dependent upon the trades you have that haven't met your exit rules, because no matter what, if it meets your exit rules, you get out. So a lot of our bearish trades that we've made in our classes, we've gotten out of some. We haven't gotten out of all of them. There's still some that are still working, including one that we did today on Netflix. I put on our Telegram service, our real-time trade alerts, and obviously that's not working right now. But one day and a very small risk anyway for a good reward potential to the downside. So we'll see if that Netflix pop to the upside tonight rectifies itself and turns back down. Otherwise, we'll take a small loss on that one. All right, so let's take a look at the Russell. This was the other red flag, and the other reason why I think we might get a near-term pullback first is we still don't have dark green shading, dark green line yet. We have light green shading and yellow line. Now it's a rising yellow line, and market sentiment's rising too, but the problem is market sentiment is still low. It's still below 50, so it's not there yet, and obviously the intermediate line. The near-term line did pop above 80. That's a good sign, but it did over here too. So we're not quite getting the nice the tip. The confirmation essentially on the small cap index that we'd like to see. In fact, on a day like today, the volatility index was our biggest performer to the upside. And you can see, the small cap index did outperform. Here's IWM versus SPX, but we want to see it outperform on an up day, not just a flat day. Like, it's got some catching up to do. Okay, before we look at some other charts here, I invite you to subscribe to our YouTube channel. Mouse over our logo right here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video that notifies you when these videos are posted. Also, hit the thumbs up icon down below the video. That tells me that you like the video, that you want us to do it again tomorrow. So that's how we get our feedback from you. That's our survey. We check to see how many we get, just to see what you're thinking and whether you want us to keep doing these. One click, you can do it right now while you're watching. Also, comment down there. What did you get out of today's video? Love to see what you got out of there. Subscribe to our Market Scholars website for free. That gives you access to webinars, our market commentary blog in our section, as well as our community forum for Market Outlook. So there's a link popping out right there in the top right corner of your screen. Click on that link to subscribe for free. Follow me on Twitter for more content in between these videos from day to day, and join our Market Outlook community or Facebook group that we've created. All right, if you want to watch our trades that we do and see how we manage them all the way to the close from these trade ideas in these videos, the Market Outlook Live is our product that does that. Right here in the top right above the video is the link. You click on here. You can also mouse over Trading Rooms and go to Market Outlook Live. That's another way to get there. And we also put on today's trade. As you saw, like with my last video, we did a bullish trade on NVIDIA, and it took off overnight. So by the next morning, you weren't able to get in. But we actually did get into that trade before the market closed Monday in the live session. So that is part of your Plus subscription plan. There's a link right here, as well as all of our trading rooms. The Q&A sessions, as you can see, that's our upcoming session here. These two are part of the trading rooms. These are my classes here. But the Q&A sessions are only for our premium subscribers. You can get more details on those under the pricing column. We also invite you to engage with us on social media here. Click this heart, open up this window. You can like the Market Outlook tweet there. Click that image. It takes you to your Facebook account. You can like it, the Market Outlook Facebook post. Again, the more you engage with us, the more Twitter and Facebook will promote our content to the top of your timeline every time you check in, and make sure you don't miss anything that we put out there. All right, let's get back to the chart. So you can see from the long-term chart, nice, good bullish pattern. So we had the transition candle here last week, and we're back to, now it's not the greatest bullish, but remember, it's, it doesn't always start off with the biggest bullish candles. They tend to get bigger as we go, and then they they taper off after that. So we'll see if, last time we had an intermediate rally, the first candle was relatively small, and then we got bigger. So we'll see if that ends up being the case again here. I don't think this will be as big of a candle, whether or not we'll actually close above those highs of these candles. If you take a look at the 3 green arrow chart, obviously we have 3 green arrows. Very, very good sign there. 2 from the market from a 2-line version. The orange line hasn't crossed, which means the 8 and 17. It doesn't exactly mean, but it typically coincides with both the 8 and 17 day crossing. You notice that hasn't happened yet. So you see how we're getting more and more bullish. We're just not quite there yet. And you can see the histogram. The histogram here. We had a pretty decent surge on the first MACD run. When these lines cross from below 0 to above 0 at the beginning of each intermediate rally. This, as of right now, would be the smallest MACD run. So again, that's why it's like, it might not be. It might be something like this, where we kind of start off, then a little weakness. I mean, not exactly like this, obviously, because we're below the 30-day moving average. But you get bullish, you get a little bit of weakness, and then you get your surge, which is what might end up starting here. It is a good sign that the stochastics is almost in that upper quintile. Let's take a look at the intraday chart, and you can see, here we go, on the intraday chart, that weakness. Again, we had a gap early this morning. We filled it. We still haven't filled this gap yet, and that's a relatively common gap, and so is this one here. So there, we still have the possibility of moving down towards 294, if not at least 296. Which is still a couple bucks away. Again, that might be a near-term pullback only, but that's kind of my expectations there. We would still actually be in the value area of volume. We're kind of flirting with the point of control right now, and again, as this comes off the table in the next couple of days, then the value area is going to work its way down too. So we'll have even more support below us down into these lower areas, and we'd have some pretty significant like this would be a resistance level, but we'd also be pretty close to breaking out if we were to get above this 300 level on SPY. Let's take a look at today's volume and trading range. You can see here, let's pull up SPY that actually has volume. About 50 million shares trading hands. The range was very light, just 1.25 points. Again, the gap got filled, so 1.25 points. Very, very small range here. You put that 50 million in comparison, it's way down there, 1.25 points. Again, these lines are falling, and even though it's a small range, and even though there might be some, small little near-term pullback to fill in these gaps, the lines are falling, and that's bullish, and that's a really good sign. And volatility has fallen down well into the lower half of the bullish zone. So, and we're easily below 50. We are entrenched on a bullish trend now. So the intermediate run has started. I just don't think that this near-term run is going to last the 7 to 12 days. I expect, maybe a couple of days of weakness on this near-term pullback before this intermediate run really gets going, and you get all of these signals, the 8 and 17-day moving averages crossing over, the MACD histogram surging up to a higher level to start the intermediate run. I don't think this is the surge. I think the next near-term rally will most likely produce that surge in the MACD. So with that said, to summarize our technical outlook, we're bullish. The trend is bull. We have a lot of really good bullish indicators. A little bit of weakness in the near term might lead to some near-term pullback, but short term in the worst degree, most likely, barring any change, right? But this, according to what the market's expecting, short-term weakness is all. Maybe fill in some gaps. Then we get that surge, that MACD surge that starts us off this intermediate run that we've already started, and gets us going most likely through the end of the year, depending upon, again, unexpected news or anything like that. But we got a good setup in the markets going forward here. So what do you think? Do you agree with that assessment? Do you disagree? There's a link right there popping out in the top right corner of your screen. Click on that link. It opens up a poll. Hit either agree or disagree. If you click disagree, comment down below on what you're seeing differently, whether you're more bullish or more bearish. Everybody's got their opinions, but what's driving your opinion? What indicator, what chart, what macro indicator you're looking at that tells you that you're either more bullish than that or bearish on that, and share that with the Market Scholars community below. All right, now let's take a look at what's going on here, what's driving the price action today. And actually the biggest mover today, which had an impact on gold, emerging markets, even to a degree crude oil, was the dollar. The dollar really dropped pretty sharply. If we take a look at the movement, you also see too that real estate was down, REITs were down here. They rallied here at the end, but REITs and then U.S. stocks, but not small caps. Small cap stocks ended up being relatively bullish. You actually see that over here. There's small cap stocks being relatively bullish on the day, whereas large cap stocks was down with the dollar. Let's take a look at the chart for the dollar. It's been trying to bounce, really like over here, but then this really broke down today. This is today's move. Obviously, this is this evening now, starting a new day. So a big kind of a breakdown here, and as of right now, getting a cluster. Of course, we're just barely into the new session here for the dollar, but it's a pretty significant break. We haven't had, obviously, it's a lower near-term low, lower near-term high, a bearish near-term high, then a lower near-term low. This is an intermediate pullback. Obviously, the if I were to do a retracement here from during this current intermediate run that we've been on this entire time, we're essentially down to about the 50% retracement level. So, this we've had an intermediate run. This is a pullback. It's a much higher intermediate low than the last one. And let me zoom out a little bit. Obviously, the one before that we kind of had, so progressively higher. Then we had this drop to this one where we pulled down to a lower low. In fact, got the market sentiment. This would be considered a market sentiment low point, a higher market sentiment low point than the last one. And you can see market sentiment's kind of fluctuating right now as we speak. The first cluster we've had on the dollar since back over here early in 2019. So we'll see, if this significant drop that we've had essentially in a week starts to work its way around. But that's a pretty, obviously that's going to have an impact on like gold prices. Now gold price is also going to be impacted by risk appetite, right? Especially considering how bullish it's been. You also notice that the yields are rising. That bearish dollar and doesn't really jive too much with rising yields. So when you consider that gold's kind of in a bearish move, yields are in kind of a bullish move, it makes you wonder a little bit about this significant move that we've had in the dollar and how how long it's going to last. One positive development today is a relative bullish move that we had in crude oil. You can see crude oil, USO at least. In fact, if you take a look at USO versus crude oil contract, you can see the bullishness there. It has been bearish. It's been trying to figure out this low point here, and kind of rose late at the end of the day. Actually rose early and then finished kind of strong at the end. Flirting with an oversold cluster like we had here before at a support level. So if the markets are going to be bullish, this has to be bullish. We talked about how small cap stocks have to participate. Well, crude oil pretty much has to as well. It doesn't have to necessarily outperform, but it has to participate in terms of a broader sense of risk appetite, and we just haven't been seeing that right now. So another kind of flag that says don't hop aboard, all aboard on that bullish train yet. We might get a little pause here in the short term until we get some of these other risk asset classes kind of joining together along with that. If you take a look at emerging markets, look at that bullish trend developing. That's a good sign for the broad market. Whether it outperforms or not is another one thing, but here's EFA also showing the bullish pattern on the market forecast. So stocks as a whole across the board are looking really good here, showing some bullish patterns. If you take a look at the, whoops, not this one. Let's take a look at the 12 grid for the 12 biggest economies here. You can see no pink, lots of dark green, and lots of green lines. So from a global perspective, we are turning things around. And we have some light pink that are close. In fact, Canada probably the closest. Russia is closest to its moving average of turning it green, and India already is green. Remember, India has been a laggard, so it's kind of been lagging behind. Everything else is well above rising moving averages. So in terms of like risk appetite, that's also a very, very good sign for the market. That we're getting everybody participating. Whereas before, as we saw in 2018 especially, and by the time we got to that October high, not everybody was participating. It was usually the dollar and everything else is pink. So this is a really good sign for risk appetite as well. Here's kind of a secondary. You still have some weakness in the Middle East, Turkey and Saudi Arabia. Not surprising, right, of what's going on over there. But outside of that, again, lots of dark pink across a lot of these Asian and European developed and emerging markets. Mexico is looking bullish. Switzerland is kind of flat. It's more neutral. It outperforms. It's kind of like a safe haven, so to speak. And then Indonesia, it's kind of like India. That South Asia area is lagging behind. I don't know if you'd call Indonesia South Asia, but that area of the world is lagging behind in terms of its performance, whereas everything else is looking really good. Strong green lines. Argentina is flat, but we know what's going on with Argentina. It's kind of an outlier there. So again, good sign for a broad market as broad risk appetite when you see it growing all across the globe. You can see from a sector standpoint, and from a 3-month chart, and you can also see this on the asset class too, that the safe haven areas are still more bullish than anything. So it kind of shows this concept of the market moves in the direction that causes the most pain. Right now, people are so bullish on safety that the most pain to be caused is in the safety trade. Is the kind of rolling out of the safety trade, which is very bullish for risk appetite. So another factor of why we are pretty darn bullish. I mean, even looking at like last year when we peaked in October of last year, I've got a lot of questions like, well, what was it like last year when we hit that October 3rd and the 3 months prior to that? Well, let's see here, it'd be the 4th, and that was a holiday, so it'd be the 5th, but we'll put that, there's the 3 months there, and we'll go to a daily chart and see what the performance returns are. And you can see the safe havens down here, utilities, real estate, staples, all lagged behind the market heading into that peak. So very, very different environment than what we're seeing here right now, which again, the most pain would be for these to pull back, and that's bullish for these cyclical safe haven areas, including the market itself. to move up. So and you can also see energy struggling with the drop in crude oil, the weakness that we've seen recently in crude oil as it sits on that low point there. If we look at the 12 grid for the sectors, again, a lot of dark green. So the only pink that we see and dark pink on one of them is the safe haven areas. You can see dark pink with a red line, light pink with a red line, light green with a yellow line. Versus all the rest of these, you do have energy material struggling. Even with the weak dollar, they're still struggling. But look at all the dark green in the cyclical areas and green lines. Look at all in these other cyclical, especially industrials and financials, both rising. So in terms of in terms of risk appetite, to see all these five, especially these five here, rising up with dark green shading and green lines, again, just shows how broad this bullishness is. We are in the beginning of a bullish intermediate run, even if there might be a near-term pullback sooner rather than later before we really get going and back up the truck and everything else kind of takes off. And most likely these will probably end up staying weak because, again, they've been the most bullish by far, especially these interest rate sensitive areas with how low interest rates have been. All right, one of the stocks in one of these cyclical areas that's had a really good move, but it's kind of pulled back. Let's take a look at the stock here. It's Procter & Gamble, PG. I'll give it a second to load up. If you take a look, it's had a pretty significant drop, and it looks like it's, we're heading into earnings, and we're almost close to an oversold cluster, which is interesting because we're about to start a bullish trend. But you can see how it's really dropped in the last 3 days. Pulled back down. If you look at the Bollinger Bands for this to look where the volume profile shows some areas of support, you can see that we've got some resistance up above us now because of the drop, but we also got some pretty strong, so we got that whole value area down below us, so we got some pretty strong support below us too. If you take a look at its implied volatility, let me pull up the implied volatility chart because you do have earnings coming up here. Oops, did that not come up? Let's try that one more time. Implied volatility. There we go. You can see it's relatively high. The bandwidth is high because of the big drop below the lower band. And again, you're kind of between resistance and support levels, which sets you up for the opportunity to sell an iron condor spread. So if you look at the November options, you can look at selling the 110, 20 delta, buying the 105, and going out to the 20 delta over here on the 124 and buying the 129 to keep the trade equidistant here. You can see that this is what it ends up looking like. You got a relatively high probability in these strikes. If I were to throw those strikes onto the chart, my break even is above this resistance. My break even is down below that support on here. So as long as we stay and volatility drops, we might get to a 50% of this. 50, well, it actually needs to come up to about, we do. That's right, we did the two contracts here. So we might get to the $125 or 50% of that pretty quickly if volatility drops relatively quickly. You can see it's got a pretty negative vega here. So a significant drop coming out of earnings, and with the stock holding a low point, might get us. It's rare to get the 50% of max gain quickly on an iron condor because it's non-directional. But if volatility drops sharply, we might be able to take advantage. And the stock doesn't move very much. We might be able to, because it already has moved a lot, we might be able to take advantage of that. Again, worst case scenario coming out of earnings is I lose a smaller than normal. You want a position size so your worst case scenario is smaller than normal risk because of the earnings risk that we're seeing. All right, well, that does us for today. As all you've heard from me now I want to hear from you. For those who have subscribed to our site, even free subscribers, use that link right there to go to our Market Outlook forums, open up any new thread with any questions or comments you have about anything I talked about in today's video. Or if there's anything I didn't talk about that you wanted to spark a conversation on, open up a thread there. Make sure you're responding to anybody else's threads as well. And let's keep these conversations going in between videos. As always, thank you very much for watching. Subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Follow me on Twitter for more content. Join our community at marketscholars.com, as well as the Facebook group we created for the Market Outlook video. Have a great rest of your evening, everybody, and we'll see you all next time.